Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. A lot of people ask me about credit data points, and there's one credit score number that comes up over and over again. That number is 680. Now, most people hear 680 and they don't get excited. They think, okay, that's good, but it's not amazing. They think they need to have a 700 or an 850 credit score before they can start making serious financial moves. But a lot of people are waiting too long because they think they need perfect credit before they can buy a house or get approved for better credit cards or refinance debt, get low interest rates, or even qualify for business funding. The truth is, everything starts changing once your credit score hits around a 680. Because in many lending situations, a 680 can be a major threshold. It's often the point where lenders begin looking at you differently. It's the point where pricing can start improving, where your options start opening up, and it's the point where you can start seeing better credit card offers, better loan terms, better approvals, and fewer doors being slammed in your face. A 680 credit score is generally considered to be in the good credit range, which usually starts around 670 and goes up to 739. According to Experian's 2025 data, roughly 20% to 21% of American consumers fall into this good credit category. So in this video, I want to break down what a 680 credit score actually means, why it matters so much, and how it impacts home loans, credit cards, personal loans, auto loans, refinancing, business credit, and even your overall financial flexibility. Because sometimes in life, the goal is not to be perfect. Sometimes the goal is to get to the point where the math finally starts working in your favor. And for a lot of people, that point is 680. So without further ado, let's get right into the video. Now, before we begin, let's say you're watching this video right now and your credit score is not at a 680 yet. Maybe you're sitting at a 610, maybe you're at a 625, or maybe you're sitting at a 675 and you're frustrated because you're literally right there. The first step is very simple. You need to check your credit reports. And I don't just mean looking at your scores. You need to see what accounts are reporting, what balances are showing, what negative items may be listed, and whether or not there are any errors dragging your score down. One platform that I recommend checking out is Rising. Now, Rising helps you get access to your credit reports and your scores, but it also goes a step further by helping you understand what may be damaging your credit profile. It gives you tools like custom dispute templates, bureau response tracking, and rent and utility reporting to help build positive payment history by back reporting 24 months of on-time payments, and it's better to me than an authorized user trade line. It also includes score tracking, goal tracking, educational tools, and guidance on credit building products like secure credit cards and credit builder loans. Right now, you can gain access to the platform for just $1 through their 7-day trial. There'll be a link down in the description below. And listen, I have plenty of credit repair content linked down in the description as well. That can help you in this process, but I want to be very clear. Everything that I teach is DIY. It's do it yourself. I can give you the information, I can show you all the strategies, and I can point you in the right direction. But at the end of the day, you're the one that has to build positive payment history, lower utilization, and move that credit score to 680 or beyond that. Let's start with the basics. A 680 credit score usually falls into what most lenders would consider to be the good credit range, or in some cases, the beginning of prime credit range. However, that can depend on the credit scoring model that's being used. For today's example, we're going to focus mainly on the FICO Score 8 model, which is arguably the most widely used credit scoring model in the United States. FICO is considered the industry standard, and according to FICO themselves, 90% of top lenders use FICO scores when making a lending decision. FICO also states that the FICO Score 8 is also the most commonly used version, which is why it makes sense for us to use this one as our main example. Then we have the Vantage Score 3.0, which is another popular credit scoring model developed by the three major credit bureaus, Equifax, Experian, and TransUnion. The Vantage score is commonly used for credit monitoring, educational scores, and some lending situations. However, Vantage Score 3.0 has not been as widely used for major lending decisions compared to FICO. But this is where things are starting to change. As of April 2026, Vantage Score 4.0 is now being used for home loans after the Federal Housing Finance Agency authorized its use for mortgages backed by Fannie Mae and Freddie Mac. So while FICO is still the main score most people think about when it comes to lending, Vantage Score is becoming more relevant, especially in the mortgage space. As you can see from both examples, a 680 credit score puts you right in the mainstream of American consumer credit profiles. Regardless of which credit model that you're looking at, again, you're right there in like the middle. It may not be a perfect score and it may not put you in the top tier yet, but it does place you in a range where lenders may start taking you more seriously. This is a point where your profile can begin to look more stable, more trustworthy, and more competitive compared to someone sitting in the fair or the poor credit range or near prime and subprime areas. Now, let's talk about credit cards because this is one of the biggest areas where a 680 credit score can start to open up the doors for you. This is also one of the questions that I get all the time in my comments, emails, and one-on-one coaching calls. People always ask me, Steven, what credit score do I need to get approved for a credit card? And honestly, I understand why. No one wants to apply for a credit card, take a hard inquiry, wait for that decision, and then get denied. But here's something I need you to understand. There is no official approval percentage that says if you have a 680 credit score, you have this exact chance of getting approved. Because banks don't approve you just based on your credit score alone. Your credit score matters, but it's only part of the application. Lenders also look at your income, your existing debt, your credit utilization, your payment history, your recent inquiries, your relationship with that bank, and whether or not you have any negative or derogatory marks on your credit report. And trust me, I know this from experience. I've personally been denied for credit cards with an 825 FICO 8 score. So if someone tells you that a high credit score alone will guarantee approvals, it is not true. That being said, a 680 FICO 8 score can put you in a much stronger position than someone with poor credit or a thin credit profile. Now, I'm going to give you some percentages for approvals based off of data that I have collected. For basic unsecured credit cards, someone with a 680 FICO 8 score may have approval odds somewhere around 70 to 85%, assuming they also have decent income, low debt, low utilization, and no major derogatory marks. For fair credit cards or starter reward cards, the approval may be somewhere around 60 to 80%, depending on the issuer and the overall credit profile. But for premium credit cards or top tier travel cards, the odds may drop to around 30 to 50% because many of those cards tend to favor applicants with scores that are like around 700, 720, or even higher than that. I also want to point out this applies to a lot of business credit cards. Once again, if you have a premium card that's in the business category that has, let's say, a high annual fee, premium rewards, things like that, you probably want to have like 730 or somewhere beyond that to get that card. But for most basic business credit cards, especially the ones with 0% APR, a 680 is what you need to get your foot in the door. And that's why in most of my videos, you see me recommend a 680 credit score. Now, you're not going to automatically walk in and get every single premium credit card approved, but you're also not stuck only looking at like basic beginner cards anymore either. Now, I also made a list of some credit cards that you might be approved for with a 680 credit score, and these are personal credit cards, like the Capital One Quicksilver Rewards, the Capital One Saver Rewards, the Capital One Quicksilver One Cash Rewards, the Discover It Cashback, the Chase Freedom Rise, the Chase Freedom Unlimited, the Chase Freedom Flex, the Wells Fargo Active Cash, the Blue Cash Everyday American Express Card, the Citi Double Cash Card, the Citi Custom Cash Card, the Bank of America Unlimited Cash Rewards Credit Card, the Navy Federal Cash Rewards Credit Card, the Wells Fargo Reflect Credit Card, and the Citi Simply Credit Card. There are actually way more than this, but these are some of the main examples that I wanted to point out. A 680 credit score can also make a big difference when it comes to personal loans. Now, personal loans are a little different from credit cards because most personal loans are unsecured installment debt. While a credit card is a revolving unsecured line of credit, a personal loan is usually cash that's not backed by any other asset or collateral. So when you apply for a personal loan, lenders are usually looking for a few major things. They're going to look at your credit score, your credit history, your income, your employment situation, your current monthly debt payments, and your debt to income ratio. And this is why a 680 credit score can be important. At a 680, you're no longer in the poor to fair credit range. Now you're generally in what many lenders would consider the good credit range, and you'll start qualifying for better personal loan options. With a 680 credit score and reasonable income, it may be possible for you to qualify for personal loans in the $50,000 to $100,000 range, or even higher than that, depending on the lender. But I want to be very clear, your credit score by itself does not guarantee that loan amount. For example, two people could both have a 680 credit score, but one person makes $35,000 per year and already has a lot of debt, while another person makes $120,000 per year with very low monthly debt. Even though the credit score is the same, the lender may approve those two people for completely different amounts. So the score does matter, but the full picture matters even more. One personal loan lender that's often mentioned for borrowers around this credit level is Lightstream. Now, Lightstream offers personal loans ranging from $5,000 to $100,000 with APRs between 6.49% and 24.89% at the time of recording this video. They also have repayment terms that range from 24 months all the way up to 240 months, depending on the loan purpose. Now, according to their requirements, you generally need a TransUnion credit score of at least a 680 to qualify. But even then, approval is not automatic. Lightstream and other lenders will still look at your income, your payment history, your credit utilization, your credit depth, and your overall ability to repay the loan. Now, if you're interested in being approved for a loan with Lightstream, I have an entire video series where I was approved for the max exposure amount of $100,000, and I give you some tips for approval. So I'm going to link that video right here. But the big takeaway is this. A 680 credit score can open the door to better personal loan options, higher loan amounts, and more competitive terms, but your credit score is only one part of that approval process. The stronger your income, the lower your debt, and the cleaner your credit report is, the better your chances are of getting approved for the amount and rate that you actually want. Also, if you're interested in a full breakdown of the best personal loans available in 2026 based on your credit score, I'm also going to link my best personal loans of 2026 video right here, so you guys can check that out. In that video, I go through loan options from every credit range, from excellent credit down to poor credit, so you can see what you may qualify for based on where your score will range today. A 680 credit score can also make a big difference when you're financing a car. In 2026, your credit score still plays a major role in how much you pay for an auto loan. And this is not a small difference. The gap between strong credit and poor credit can literally cost you thousands of dollars over the life of your loan. According to recent auto finance data, borrowers with very good credit or super prime credit, which is usually a score of 781 or higher, are seeing average new car loan rates around 4.66%. But borrowers in the deep subprime or poor credit range, which usually means a score from 300 to 500, are seeing average new car loan rates of around 16.01%. And when you look at used cars, that difference gets even worse. Very good or subprime borrowers are seeing an average of used car loan rates around 7.70%, while deep subprime borrowers are seeing average used car loan rates of around 21.85%. So if you're planning to buy a car in 2026, here's what you need to understand. The price of the car matters, but the interest rate can completely change how much that car actually cost you. There can be two people that walk into the same dealership, buy the exact same car on the same exact day, and still end up with two completely different financial outcomes. One person with strong credit may get a lower interest rate and a lower monthly payment and pay far less in total interest. Meanwhile, someone that has poor credit may get stuck with a much higher interest rate, a higher payment, and thousands of dollars in extra interest over the life of that loan. That's why a 680 credit score is such an important threshold. It may not put you in the absolute best credit tier, but it also moves you out of the most expensive borrowing categories, and it helps you qualify for more reasonable financing options. When it comes to buying a car, that can be the difference between an affordable payment and a loan that drains your budget every single month. Now let's talk about one of the biggest reasons people care about hitting a 680 credit score, and that is buying a home. Now, a lot of future home buyers think they need perfect credit before they can even start the process. But here's the reality. You don't need perfect credit to buy a home. In fact, depending on the loan program, you may be able to qualify with a score much lower than a 680. For example, conventional loans are the most common type of mortgage, and a 620 credit score is often a common minimum threshold. FHA loans can be even more flexible. You may be able to qualify for an FHA loan with a 500 credit score if you put down at least 10%. Or you may qualify with as little as 3.5% down if your credit score is over 579. Technically, VA loans don't set a minimum credit score, but many lenders will still use their own minimums, and 620 is a common requirement. USDA loans also don't have one universal minimum, but some lenders may require at least a 580 credit score, and if you want to go through a more streamlined review process, you may need a 640 or higher. So yes, you can still buy a home without having an amazing credit score, but here's the part that most people miss. Getting approved for a mortgage and getting a good deal on a mortgage is two completely different things. That's also where a 680 credit score starts to matter. When you apply for a home loan, your credit score can affect your interest rate, your mortgage insurance, your down payment options, your monthly payment, and your approval strength, and ultimately how much house that you can actually afford. Because if you do get approved with a lower score, but that lower score gives you a higher interest rate, a higher mortgage insurance, and a higher monthly payment, that home could cost you thousands of extra dollars over time. And when you look at the mortgage rate data by credit score, you can see how this will play out. In this example shown by Experian using data from March of 2026, a borrower with a 620 FICO score had an average 30-year conventional mortgage rate of about 7.14%. At a 660 score, that dropped to around 6.88%. At a 680 score, it dropped again to around 6.79%. Then at a 700, it was about 6.63%. At 740, it was about 6.44%. And at 760 or above, it was 6.35%. Now, those numbers can change depending on the market, the lender, the loan amount, your down payment, and the exact day that you apply. But the lesson is still the same. As your credit score improves, your mortgage rates can also improve too. And even though the difference between a 660 and 680 may only be 20 points, that small credit difference can still impact your monthly payments. Over a 30-year mortgage, even a slightly lower interest rate can save you real money. And that's why I like to call the 680 credit score one of those best bang for your buck credit score thresholds. For many borrowers, a 680 is where the math will start to look a lot better than it did in the low 600s. And again, it can affect your private mortgage insurance, also known as PMI, if you put less than 20% down. PMI is the insurance that protects the lender if you stop making payments. So if you're putting less than 20% down, you can't only look at interest rates. You also have to look at the mortgage insurance cost. At that 680 range, PMI pricing can become more affordable compared to lower score ranges, which means crossing from a 660 to a 680 could potentially lower your monthly costs more than you realize. And when your monthly payments change, your debt to income ratio will also change. When your debt to income ratio will change, your buying power changes. And when your buying power changes, the kind of home that you qualify for can also change. So no, you don't need a perfect credit score to buy a home, but if you can get your score to a 680 before applying, you may be giving yourself a much better chance of getting approved on better terms. That will keep your payments more affordable and avoiding the mistake of buying a house with a loan that cost you way more than it should. I want to thank you guys so much for watching this video. A 680 credit score means that you're generally in good credit territory, and it tells lenders that you've shown some level of responsibility with credit. It can also help you qualify for personal loans, credit cards, business credit cards, auto loans, and mortgages. It can also help you access better interest rates, lower fees, stronger offers, and more financial flexibility. But most importantly, a 680 can be a threshold. It can be the point where you stop getting punished as much by the lending system and start getting access to better opportunities. So if your score is not where you want it to be, start with the basics. You can try rising and check your credit report, fix any errors, pay down balances, make every payment on time, build positive history, and be patient enough to let the process work. Because once you hit a 680, things can really start to change. And once you understand how to use that score the right way, you can start making the financial system work for you instead of against you. Once again, thank you guys so much for watching this video, and you have a wonderful day.